Talk to me honestly. I'm here. I'm here.
What's up, Rock Scooter? Good morning. Monday, March the 27th. Brand new trading week starting. Got a lot to talk about. Market has given us some very interesting information. Ash and I are making some pretty bold calls individually, lining up so we both have the same perception of the market. We'll talk about that today in today's stream. But for a while, one may assume that it's very possible the bear market's over for a little bit. We might get some nice bullish months ahead of us. We'll talk about that coming up. See you in just a second.
Talk to me honestly. I'm here. I'm here.
Ready to do this? Let's go. Smash that like button as we get started. All right. Okay, first, right out the door, DD bands opening nice and clean and rational inside of all of them. I like what I see. That's always a great start. All right. Welcome to your Rock Scooter live stream. Oh, where's the other music? About 2 minutes, I'll be live on Twitter Spaces for the next 3 hours or so at the same time. So I'll be double dipping here, but you know how things work. ED band, rational, risk interval VIX, didn't trigger, 2 rules, nice and clean. 2 of the 5 rules are good. We got the rest of them going to show up whenever we do launch the platform. Keep in mind, we do have that triple B coming up. This is one of the usual series of rules of mine. And above this white line right here, we call the market unusual, which means pivots can overshoot. I have to keep note of that. In a bull market, what you ideally like to see is you trading below this number. It stays fixed for an entire month. It's calculated on the Tuesday before the 3rd Wednesday of the month. It's not the 3rd Tuesday of the month. You have to say it the other way. 3rd Wednesday, subtract a day. And in rare exceptions, they'll manually make it a different Tuesday, which in February or in March they did, because February was a very short month that already started on a Wednesday, so they had to kind of give an extra week. Anywho, that being said, it's a calculation we do. It stays there all month. When you are trading above it, volatility expectations for months in advance. This is futures. Are you pricing future volatility now? The April contract is pricing in a certain level. And if you're supporting this line, it just means a underpriced volatility. So we came to April, heading up in April, and volatility is now more or less than what it should be. That's what this is looking at. The principle called contango, backwardation. The contract being in contango. When you are in a market where you overprice volatility and it's rapidly collapsing, you will see this triple B number be resistance. As it is support in the last couple of days, it's created unusual volatility in the equities markets. And as you will see, leading in that expiration that week, here's your unusual volatility those days, and that goes hand in hand with this. Pivots overshoot, hitting the bands, overshooting, it's not going to be as clean. So in a bull market, what you want to see, or a bull month, is this number decay below it, and this act as resistance. And usually when you get those months to do that, you get a month of, the groundhog doesn't see its shadow. An example is here. You see on my screen, everybody, when you decay below that number, it's nice, clean rejection. You just get straight, clean bull trading for the end of the month. That's what you want to see in a bull market. And it's pretty common that bull markets have that structure. You're contango and you bleed out. There you go. It's contango, and then VIX just dies for the rest of the month. That's a clean trading market. Very easier to trade them. Trading's ever easy. This one isn't drawn. It's easy to see right here. Probably where that resistance is, somewhere in here. It just was clean the rest of the month. So what you want to see is that VIX just be in decay with no events or catalysts appearing. And it is pressing to at least try again today. So my long targets, obviously when this hits here, you see how there's rejection. My long targets in the S&P, if we do have Rocket Scooter show me some insight today that shows me that I do want to take a long, I clearly will try to exit my longs just to prevent volatility from popping out of nowhere on that rejection. So that is a place where sometimes I'll just pull the ripcord. And as you see, we're very close to the upper DD band. We come in and DD is greater than half. I'd like to take a long, trading it up to the top there. And then, they'll both probably tap about the same time. That's kind of what I'm thinking. So that's a remark analysis. Things are nice and rational, which you have a pretty decent heavy position here. Heavy, but like full position that I'm ready to take. So whatever that is that you calculate for yourself is always going to be different than mine. Here we are. Center, get ready for the start. Hit that like button while you're waiting. Got to hop onto a couple podcasts today. Talking about where's my feed here? There it is. Okay. I think it gets started at... Oh, we start in 2 minutes. I'm early. Why not refer to the DXY at all? It doesn't correlate with the stock market. Good question. I don't say that out of opinion. I say that out of the correlation table. So as much as it is, and we can talk about a little bit about what's going on with the dollar today, especially since the dollar may not be the reserve currency of the world anymore after last week. Who knows, right? Who knows where the world is going? Are you guys watching the news here? Every hornet's nest we've kicked in the last 20 years is now on the same team. Ugh. If that doesn't make you go to Costco and start stocking up on that red plastic bin of rice-a-roni that has a 25-year shelf life, I don't know what will. If anybody doesn't know what I'm talking about, the peace deal broker between Iran and Iraq, led by the Chinese. Now you have China, Russia, Iran, Iraq, Brazil on the same team in a major oil alliance now. You're going to likely stop selling barrels of oil, US dollars. There's all kind of things that come out of that. Fun news events that I've been reading as of lately. Here's your dollar. Here's your dollar index right here. Your dollar futures, correlating with NASDAQ and index futures. You think red or green is a strong correlation, positive or negative? The dollar right here, practically neutral. It's no correlation on a whatever timetable you can pick. So it doesn't. I bring it up when it does have some correlatability. It's really loose. It's not. It's somewhat of a negative correlation, but it's not strong enough to trade off of. I like to see something 80-90% positive or negative. As you can see, even on longer terms, I just picked like a 90-day, 180-day. I just checked. There's really not a lot of correlations. The MRCI correlation too. I love this thing. Practically neutral. Zero being neutral. So it's not going to have any effect. So it's not worth discussing. Correlation has been off for a while. Sometimes the dollar sometimes trades with the market, sometimes doesn't. Everything independently moves for different reasons. Obviously, in periods of inflation like we have now, the dollar is going to move independently of the stock market. People are going to choose where they want to take risk, and they're choosing certain things over other things. It's like a nice bull market where the market's clean, and you will look for the dollar to give you signs the market's not clean. But in the period of you're already in a bear market, there's not a clean correlation between a lot of the stuff that people try to correlate when markets are strong and bullish. So market gapping up, moving up. I want to grab a nice long. I got 8. I told you guys last week I was trying. I was redoing the eval. So the first two evals I did with that ETF. I'm just gonna do one more. This is I'm making courses on how to do evals. This is another 150 static. I saw the other two, so I made it to the finish line, and I'm not using them. So I'm not trading them. I'm just getting to the end so I can have the experience to make the video. This is the second 150 static. I'm $800 away from it. So I'm going to wrap that up today, finish that up. I'm going to go back to my 100K challenge that is still going on. The account value, the 100K challenge from the 10K start. If you guys haven't paid attention, people ask, what about that one? Oh, it's still going. It's so weird. I guess there's just so many like fakes and weirdos in the industry that if it disappears from your stream, you lose trust. Well, I would too. I guess nobody shows it, but here it is. Same account number. There's the account balance. Haven't taken a dime out of that account since I started. So I'm almost up 200%, 171% to be exact. So 10K is at 27.1. I have the yearly broker statement posted, that challenge account, and the Discord. You can see the entire stats. I'm showing like 72% at this time. Static eval is to take 150 to 155 with at least 5 days of trading. I'm using a different strategy than the last time I did just to see the viability of it. So you guys know my rule here. I don't put anything into Rocket Security unless I've traded with my own money or at least tested it out. So if I'm going to teach an eval class, I'm going to teach the process that I physically have done for my own integrity. I've always been this way. They seemed a little, when I told them, yeah, I want to do the evals. They seemed a little surprised. They're like, you want to do the evals and that's it? Yeah, just want to do the evals. I guess most people that use these funded accounts, especially educators, would like to skip the eval process. I'm like, no, I absolutely 100% want to do it. I want to do what everyone else is doing. I want to see how hard it is. I want to see if I can pass it. I want to see if my strategies work inside of that environment. What's up? What's up? Good morning, everybody. So once I got to the end of the first static, I said, I want to do another one. Just to start over and try another strat. And I'll detail that in the series, of course, I'm going to film this week, how to do funded trader programs. So that's going to be a huge thing we do, is focus on specific styles of trading, different things you can do. This next week, of course, so I'm going to be focusing on futures trading. Ashton's been doing his options trading course. I'm doing specifically futures trading courses, so I'm excited to share. So part of the future series was just for me to do the funded thing, because a lot of people like to do these, And they are very hard. I'm not going to lie. If you don't know what you're doing, I can sense, you may think, okay, well, you didn't make it look hard, Matt. I watched you do it and you just went to the end, but it wasn't easy. It wasn't like I just walked to the end. It was very meticulous. I spent a lot of time planning and looking and adjusting. So, yeah, this will be fun to talk about. 5 minutes till market opens. Clearly right out the door, we want to make sure that we have resilience positive. So that's the first thing we're going to look at. Markets are rational, so a nice clean resilience at 0. I'm ready to go. $800. I only need a couple contracts on this. It's far enough away that I'm going to feel pretty happy about that one. From failed, 99% failed the verification step. What's the verification step? Which program or whatever? Oh, the challenge. Oh, the challenge part. Yeah. There's different tricks for each one, and as I've been like looking at all the different programs out there just to see, there's basically 2 types of programs. There's 2 different ones. There's either one where you just have a fixed loss, and there's one where you have a trailing drawdown, or they combine those in some faction, some combination. Other than that, there really is no difference between those evaluation and a lot of the ones I've looked at. So if you define which one you have, one or the other, the combination, then you have to consider different factors while you trade and track 2 different things or 3 different things. What's up? Morning, guys. Smash that like button while you're here. Getting ready to get started. So, again, repeating where we are today. Go back up to the market's opening a couple minutes. Rational near the upper bands. That's great. When DD comes in, whichever fraction DD is, bullish or bearish, I'm going to look to tap the bands from inside the bands. Exiting at the bands is typically a trade I like to do. We're above triple B, so I can expect some overshoots on pivots. Means I'm going to stage into my longs if I do get them. Maybe cut it in half and expect an overshoot, dive in a little bit lower on the overshoot. Dropping below triple B would be nice and clean and bullish for the market. That's it. So I want to see resilience is going to pivot me right out the door. I hope we get a nice clean resilience. Clearly it's going to be a nice little gap up here. I'm going to look for resilience to be positive. We are up about 25 points. So there could be some downside for me to be careful like the long right out the door. Upper DD band is roughly about, I forgot to run the box, about 40, give or take. Where am I? Oh, I reset my cookies. That's where my lines were. So we're going to be about right about here, give or take. Just an estimate. So you see how before the market opens, my brain says I don't want to short unless we're below monthly hedge pressure. You guys know my rule there. So if the market opens nice and clean, whatever resilience gets, it's going to be like a resilience pivot up to here, supported by liquidity map. We get it. Everybody, if you don't mind, take a tap at that like button. Just click it. Click it really quick. Trailing drawdown noise you. They're all somewhat different, but each one of them has tricks you can employ depending on how close or far away you are from each of the drawdown points. Typically, you have a minimum account balance that's governed by 2 different things, either a daily loss or a drawdown. The drawdown's either static or it moves. And so either one of those, you have your loss per day. So you have to make sure you know what you can lose per day. Sometimes it's greater than loss limit, sometimes it's not. Resilience market's open 11. Out the door. Let's see what we get. Let's go. Get the full resilience over here. All right. Let's see those calculations coming through. Okay, taking a look at this. Resilience is clean.
Order filled. Order filled.
Okay, huh. I just longed on my main account. Oh, that's my main account. Sorry. I have it open on off screen. I'm still doing this eval right here. My main account is off screen. So resilience is positive. I took a long right out the door. Make sure my thing is open here. There we go. BLU right out the door. Sorry, I get a little kind of head up on Mondays here. Resilience is positive S&P. We are at the upper part of the band. I do want to long from somewhere inside of here to there. BLU is a bounce from there to there. I reset all my cookies and stuff. So that would be my main account. I grabbed a couple contracts there. So what I want to do is, I'm going to be very picky on this eval. I want to make sure I long from here to the bands. Now, this is type 1 resilience with a little bit of overshoot. To be very careful here. Yeah, my 100K challenge account. I grabbed a couple out the door. I'm going to add back here up to the upper band as long as rest stays positive. Yeah, unfortunately, I'd like to put them all on the same screen, but then Rocket Scooter wouldn't be front and center. Just going to do 2. You're right on. So I am long out the door, 2 upper DD band. Resilience, we got to be very careful that resilience needs to stay positive. So we got a couple of stocks on the fence here. I need this guy to be very positive. Now, above 1 is good enough because, above 0 is good enough because markets are rational. 0.89, DD does move in real time to say we do support in the bull zone, which is really far away. Bull long up is an open blue open. So if we dip to blue, I'm going to double down and trade it back up to open. But the gap and go case is supporting it upper redistribution zone band. It is a gap and go trade from here to the DD band. So I'm going to take it. Nice and clean. So I just need to get this guy to 155 to pass this eval. Calling it a day. See if I get it. Nasdaq was pretty weak, so be careful with Nasdaq today. Looks like tech's getting some weaknesses, but whatever's getting strong, the S&P, I like to look. S&P has its own motivations today, so I'm being very careful. This is right on the edge here, so I can be careful on this one. Why don't I do the 300K one? So Eric, I did a 150K static and passed it. I did a 250K end of day drawdown and I passed it too. This is the static. I think this is the highest one they had in the static. So I'm redoing the eval a second time just to do it. Ooh, here we go. Here we go. Here we go. Let's pay attention to this. Why does QQQ look weak? Just because certain stocks in QQQ are pulling back. If we're going to go through and take a look and see if there's anything, we can pull up some of the top stocks in QQQ. Let's see what we got. Pepsi looking good. Nvidia. That's probably why Nvidia is a gap down. You can clearly see that. Amazon is a gap down. Maybe or gap up. We'll have to see. Amazon is a flat. So you're just having gap downs in some of the stocks. That's exactly it. Resilience is just sensitive to that. But you do have bull supports inside of here. So it's interesting to see. So just you have some mega caps pulling down. But we have to be very careful with the S&P resilience, right? So this might actually pivot me lower, which is great because I do want to get a better dip, right? So that resilience being negative is a scary thing now for me to probably want to abandon my trades quicker rather than later. Now I have to tell myself, am I okay holding 2 contracts to hedge pressure? 15, it's a 15-point drawdown. So what would 4010 look like in the account? About a $1,200 loss. I can double into it, probably. So that resilience needs to get back to being positive or I'm going to not like my trade. So you just have some of the stocks looking that way. But S&P does take precedence, right? So that's how that works. So if S&P is positive and Nasdaq's negative and markets are rational, S&P, I always let it be the winner. So a lot of times in this instance, I will use the Nasdaq since it's lagging to pull out. Now again, this is right on the edge and I don't like that it's trying to turn negative. So we'll have to see. Which means I could take about 15 points of drawdown, which would be great because it give me a bigger win today. Now I'd have to take some heat to get there. Trading inside of here kind of be scary from there. So I'm going to have to be very careful on this one. It'll be about 40. Let's see from here, about 398 to about 396. It's about a 10-point dip from here. That res is going negative. Yeah, it's probably gonna hit that bounce. To be very careful there. So that's not a good sign. So when resilience goes negative like this in a rational market, it's likely going down to overshoot hedge pressure. So I'm probably going to be better off trimming this, but I only have 2, so I'm okay. I'm actually going to add when it dips. No good. What's good though? DD being positive, or sorry, DD being bullish, I am looking to touch the upper band as long as we find some kind of support here. So obviously here to there is a decent trade I do want to take. I probably am going to do the smart thing and start figuring out how to start trimming on this. And my main account, I'm going to hold through it and add at the bottom. So to be very careful, if resilience gets negative, it can predict the hedge pressure break, and we're going down to there. So be very careful on hedge pressure breaks on this one. I don't like that resilience is weak. If resilience doesn't get strong for a little bit, then this can come down really quick. So my bull thesis is, for at least for today, lower before higher. So I kind of want to just be cautious on this one. Thinking about trimming. Let's see if what happens when we get to 0. All I'm watching right here is resilience at 0. Okay, hang in there, baby. Let's go. That's what I want to see. That is what I want to see. Good deal, good deal. All right, good. Gotta make sure this stays above 0. So typically you'll get like one resilience test and a rational mark, and then that's it. That's clean. I do like that. That I did. I only need $600. So on 2 contracts, that'll easily be, or $800 from here. It'll be achieved pretty simply with 2 contracts. Pretty easily. If I hit the upper DD band, it's done. DD's very strong. The thing is that DD, so the way that this works, right? The resistance is DD has 2 functions. When markets are rational, DD means bull zone is support. That's why I like to trade it. And DD means upper band before lower band. So the market loves to touch that upper band when DD is positive before it touches the lower. With the BLU support off a hedge pressure, so there's support from here to there. With resilience being positive, there's support from here to there with the overshoot that I mentioned about Triple B. Triple B has overshoots, the first thing I did pre-market, and that's a detail of that. The SPX option sticker, I don't, that I do not know. Good question though. Good morning, everybody. Smash that like button while you're here. So any questions? We're close to BB on VIX. Yep, that is where that volatility can be coming from. And just being above that triple B level will create that kind of effect. So on my 100K challenge account, I actually added to it the one that you heard this morning, the order filled. So I had to open it in a browser. So like you can't open in Tradeovate, you have the ability to like combine like group different accounts together as long as it's the same login. So I have to open Tradeovate in a browser. It sucks. But tomorrow my 100K account will be front and center. As soon as I pass this one, I'm done with it too. Sorry, I'm done with streaming it. So look at that Raz. Baby, baby, baby. Daddy love. Is that the cat growling? You hear a growling sound? Bro. Oh, look. I can't keep my cats out of my office no matter how hard I try. I have a little screen against the stairs, and the door is closed, and I heard some growling. The cat's in my feet. You cannot keep cats contained. So anyways, upper DD band is where I'm trying to go. Triple B is where volatility can likely be. So I want the market to decay below there. Sorry. I had to come through here and I had to deal with some cats today. Barb is saying, as you speak, all three of your cats are circling in your office on the desk on your left. Cats execute trades for you when you're not paying attention. They sit on your lap and push buttons. So things are nice and tidy here. Let me go ahead and add resilience. I don't know how he got over the barrier. Got 2 dogs laying behind you, watch you and a cat trying to sit on your feet. Your cat just smashed a wine glass on your desk. I don't get it. She never wants attention until you sit at your computer. Right? And then cats, when you want to give them attention, they say no. Right? So I just need to get this to 155 and then I pass the eval. So each eval I've done, I've completely just finished them both. I basically passed all of them. This is a different strategy. Again, I need to make sure I test out my strategy before I make a class on it. So that hits 155. I'm going to close it out, and that'll be my 30 eval passed. In futures, I'm doing a second one. So my goal is just to do the evals, just to see what it was like to pass them, so I can make a class on how to pass them. So as soon as I hit 150, I started over and I was doing another one. Again, I'm just doing the eval just to do the eval process. That's it. I'm gonna make a video on the whole process. Yeah, I'm not using those other 2 accounts. I'm still doing my main account, trading on stream. So as soon as I finish this one, it'll be finished, and then I'll be back to streaming my main account. Yeah. So this one's got to go to 155 as well. Well, Matt, y'all are hilarious. Well, Matt doesn't say that, but I mean, when you're a funded trader, it's a great place to get started to get trader funding if you need funding. Matt is fully funded, self-funded. There's no desire for me to trade and share profits personally. Yeah, absolutely. I mean, not saying that I don't need it. I mean, saying I don't want to, I just don't need it. So if you are looking to get funded, trader funding programs are great, and it's a huge portion of our client base. The reason I want to do what you guys are doing is because I want to feel the same experience you guys are feeling. I want to see what it is y'all have to deal with. But yeah, I got to the end, and I'm not keeping the accounts. I'm not using them. You guys nailed it. So I told them, I said, I'm starting over. I'm going to do it one more time. Yeah. That's a real trader right there, folks. That is a real trader. No, I don't need the trading account. I got one. I got a bunch of them, actually. A bunch of my own trading accounts. Let's get this guy to 155 and let's cut it out. This is a slightly different strategy. This one was here. And you will do more on how to work these funded accounts at a later point. That is the one thing, is that in the funded stage, that's also part of the game, right? You have to survive in the funded stage as well. So now that I'm just saying that in my head, I guess I do need to operate a funded one as well, just to detail how that works too. I guess not just passing it. Well, I don't even think these things all the way through, do I? Good point. Good point, Benji. Yeah. Exactly. You will do more on how to work the funded account. So once the account gets funded, then what do you do? I guess that's true. I could keep one and then just donate all the proceeds to rocket scooter development. No, seriously though, I guess I should do that. I didn't even think that through. Because that is one of the bigger struggles. You pass the eval, then what? You have to be funded and you have to maintain it. So I guess that's important to demonstrate. Don't think. Yeah. Oh, just know my original thought. I didn't even think to do that. I didn't even think to do that. But you guys are a lot smarter than I am sometimes. I just thought, let's get to the end and then check it off the box. Eric, have you unfunded as well? The emotional impact of using proper account is much easier, and you find you do way better. Well, it's less risk. It's less of your own risk, right? They're sharing the risk with you, right? Well, I love you guys. I think the purpose of prop firms, you fund yourself from the gains. Yeah. So like, you fund yourself with the gains. You take the gains, build yourself out a tiny little trading account, then grow out your own trading account. I think that's what a lot of people do. So like, if you can trade yourself out, 10, 5, 10, 15, 20K and start out from there, then you can do your own personal 5, 10, 15, 20K growth accounts, the way that I do it when I teach my small account challenges. Right now I'm doing a 10K to 100K trading challenge, and that was my goal, to get to 100K. Steady as she goes, man. This is great. Upper DD band, here we come. It's gonna be about 40 on the S&P. I'm gonna get a nice little spiky green candle, and I'll just close out. That's enough to beat this. So Bill says you pass evals easily, but mentally you can't seem to keep a funded account. Oh, interesting. So let's let you guys vote. Do you guys want me to continue to demonstrate the funded account? Or do you want me to do that 100K challenge? The 100K challenge, I still post the stats every day. So do y'all want me to do the funded account? Y'all want me to do that? I'll let you guys pick. The 100K account's going nowhere. It's still there. Well, okay. Looks like y'all have spoken. I guess I'll still... I can only show one on stream. So, I mean, I guess I could show both on stream, but in reality, I think that having too many trade of 8s on stream and Rocket Scooter gets like squished to the left. Meh. I'll have to just pick one. Either. How to keep a funded account alive. I can report on both of them. I can just only show one of them. And I would be obviously doing, a more, I guess the word I'm looking for is a stricter strategy in the eval or the funded environment. Resize the DOM window. You can't get any smaller than this. This is as small as it goes. It won't go any smaller. I mean, and let's just be fair. This is a stream for Rocket Scooter. This isn't a stream for Matt's trading, even though it's Matt trading using Rocket Scooter. Rocket Scooter wants to. Rocket Scooter is needy. It's jealous. It doesn't like to put other platforms next to it. You don't want a bunch of trading platforms on the stream. Rocket Scooter wants to hog all the real estate. Rocket Scooter is like a Like a jealous girlfriend. Who's that? Huh? Who's that? Who's that over there? Who's that? Huh? Huh? Who's she? All right, all right, all right. So if I start stacking trade evates over here, then obviously the point of the stream is to show off our beautiful colors. Yeah, it's such a diva. Excuse me, this is our table. Yeah, this is our table. You need to get behind the rope. We bought this table. Rocket Scooter insecurities. That's true. That's true. Actually, Rocket Scooter says, "Come on, come dance with us." I know. He ain't gonna look at you. Come on over. No, but just jokes aside, when it gets too small, I just like if this was like way over here, then clearly it's not as easy to use when everything's cramped together. So jokes aside, just personal preference. I'd like to have one instance of Trade of 8 because pretty soon I'll be able to click a button here and have my own DOM inside of Rocket Scooter. Unfortunately, we won't be able to trade anything Trade of 8 related. These companies that do these firms, these firms that do these evals, they have a special API for evals that uses Trade of 8. There's no, and Trade of 8 doesn't have the ability for like me to trade an ETF into Rock. So like I can't build that out. I've already talked to the top brass at all these companies to see what's possible as a developer. So you have to still use the legacy Trade of 8 platform, which is cool. I love it. It's one of my favorite trading platform besides my own. They're great. But unfortunately, I'd love to like log into my Trade of 8 account here and fire the trades off that way, but not possible. And that's their choice. That's as a business, that's their choice. This makes sense as they're a trading platform. Exclusivity inside of their environment would be their prerogative, which I don't blame them for that. You're wondering how the prop companies got access? You can go to Trade of 8's enterprise website, and they literally on the front page have all their enterprise products you can buy. You can buy a kit. Yeah, literally Trade of 8 sells a kit to start a prop firm, and they literally created that rubber stamp. You can go start one tomorrow if you have a funding source. I didn't post the DD bands today. Mansoor, I was running behind. Trail down forces to take profit early, but creates a ton of fear when trading. Well, if you look at it depends on how some of the accounts work. Like, so like the drawdown typically is for most of the ones I was researching, the drawdown tends to stop once you break even. So the drawdown only affects you when you are starting out more than it does as you're gaining in the account. So you in most every instance, you need to make your first trade your most confident trade. Like the first trade is this is up, that's up, bull long up is up, like all things line up. It's a really solid confidence. My first trade needs to be my winning trade, right? So psychologically, for you have to make sure that no matter which stage you're at, eval or funded or whatever, combine and top step or whatever all the other ones are, you have to make sure that your first trade is your winning trade. You have to build a buffer in the account for you psychologically. Psychological limitation, right? That res is hella strong. Let me double check, make sure I'm not overlooking anything today on the news. So you need to make sure that your daily drawdown or your max drawdown or your account balance minimum is not, you're not on the edge. So like if your first trade is DD's very close to 50 and resilience is right at 0, I mean, it's not a solid day. You sit out and sit out and sit out and sit out and sit out until everything's solid. And then I would take a trade when everything's solid. So your first trade has to be your most important trade, pretty much out the door, because those trailing drawdowns tend to trail up to a certain point and then they stop trailing. So it's once you break even, the trailing drawdown stops and then it's fixed. I think it's $100 over the break even for the elite account once you get the ETF one. $34, that's nice and solid. Supporting here. If there is a dip, it's quick. I'll pile back in, double down here, close out there. My main account this week. Housing prices. That's going to be something. People are, talking, is the housing market going to crash this year? And that's a lot of the chit chat. I don't think so. I don't think it's possible. Unemployment went up and is staying high, but there's not more and more people getting laid off. So risk of default, whatever it is, it's the same risk of default that it was 6 months ago. I mean, the risk is not getting worse because the same amount of people lost their jobs. You're not seeing more and more people losing their jobs. Those unemployment numbers you can see. Let's look at a Thursday. Nice and flat. Initial. Oh, GDP Thursday is going to be a big deal. That's a big deal. To keep an eyeball out on the catalyst this week. I'm losing no confidence in my trade. No confidence. I'm 98% confident. The continuing unemployment claims are the same as they've been. Okay, don't let me lie. No, I'd say 6 months. That would be December, January, February, March. So 4 months. So the last 4 months, we've been sitting steady. Now again, how many months past due are these folks that are unemployed back here? Maybe you can get to 3 and 6 months past due. But I'm not about to go dig through some mortgage bonds, so it's none of my. Dig through some mortgages in the bonds, Michael Berry style. Don't really care to do that. Let's see this guy right here. GDP. Initial jobless claims are pretty much flat. So layoffs are pretty much over for now. 1, 2, 3 waves of layoffs. Initial claims are people that go file unemployment like the day they get laid off. You can file unemployment that week. You need to keep your paycheck coming. You get laid off, you go file unemployment. You'll do it in your car before you drive home. I mean, that's what this really tells you. These are people that are getting laid off, laid off, laid off. So like 4 waves of layoffs we've had, and it's practically flat. The people that were getting laid off, the first 2 or 3 waves are getting their jobs back. And the people that recently got laid off are not getting their jobs back. They're continuously filing unemployment. But it's a nice flat number. So it's like the layoffs are over for now. But, how's that affecting the GDP? Will tell you if that was efficient or inefficient labor. If that was inefficient labor, GDP comes out the same or better, then you laid off people that were getting paid to do nothing. GDP comes down, then you'll know that people that were getting laid off actually did something, as well as just performance of the company, the performance of the economy is lower. Less people are buying less stuff or making less stuff, whatever the case may be. So general slowing of the economy wouldn't be the best news. The GDP coming in flat despite high unemployment, that'd be great. It just shows you just trim the fat, and that's great for companies. That's very bullish for companies. So we want GDP to come in Thursday, a nice flat number or better than flat. I think this week's going to pre-position the market for GDP. I think that is the telltale sign that'll forecast company performance during Q1 earnings. So we'll see, right? As Grasassin said, that's any account. He was talking about when I was saying my the idea is your first account, your first trade always needs to be your best trade. Yeah, that goes for any account, I would say, psychologically. So you want to make sure that you're losing house money more than you're losing your money in your head, if that's what you need. It's a better psychological barrier. But even in the account here, probably like mathematically, since you do get kicked out of the account before you go to zero is not the point where your emotions start freaking out. Your emotions start freaking out as soon as you fall below your starting point, right? So you have to make sure that you at least give yourself a buffer on the starting point, but you don't also want to make sure that you don't make that your point of being careless. Like if you Oh, I've made $2 or $3,000 in the account. I can afford to lose. Let me take a riskier trade. Never compromise your strategy based on having money in the account. You need to put a little bit of a buffer so that you can lose 2 days in a row to hit that drawdown instead of just one. This nice and steady, not scared whatsoever. No events coming out today, nothing going. I think we just zap right up to there. That'll close this out. I'll call it a day. Like I said, I've been just hanging on to it. You need to size appropriately. If your account has $15 trading draw, you should only be risking 50 on a trade at max. That way you're up 50, goes down 50, so up 1200. Yeah, there's the trick to beating these evals is your position size. I mean, that's it. They dangle the carrot in front of your face and give you 30, 40 contract, whatever it is. And then, you know, I walk in and trade 3. The 250 eval, the one that I passed, it was like a 4,000 something daily loss limit, 4,300 I think, and like 7,000 trailing drawdown. I never win more than 5 contracts. They let you trade 24. I traded usually 3. If I was really confident at the bottom of DD bands, I trade 4 or 5. Just inched my way there. Longer, harder process, but still. Interesting. Interesting. That's good. This is good. We need to keep this steady. The S&P is trading much quicker than the stocks. Now, resilience is coming down a little bit, but still supporting in here. I'd like to see. Now, again, I don't like that we're so close to upper DD, but I do like this environment where we are. Hedge pressure is my stop. Okay, so 2 places my stop, right? Losing hedge pressure clearly is an out. If resilience goes negative, then clearly it's an out if I'm up here, because resilience being negative means that we can break through hedge pressure to fill the gap, which can cause a chain reaction to support there. Clearly with resilience being positive, I'm still holding the fort that half gap is support from there to there. It's kind of like 1-to-1-ish trade, but it's a really high probability. DD being 90%, at least on a hedge pressure break, we support 390, so I'm not chasing a short. But I do know if I was swing trading, right, hedge pressure breaks, I would buy puts down in here, you know, essentially, to hedge any long position I have. The accounts follow your highest point until they break even. Yeah, and so you have to also correct. And the other caveat is, like, you really have to read these rules and understand them. And most of the courses are about that. Read the rules and really understand what you're in for. Like, what is the drawdown based on? Is it the end of the day? Is it the unrealized gain of the day? Is it the high of the previous day? They all have little... And you guys say, why are they all different, right? It's kind of like, you know, everyone has their own unique flair to the process. You know, everybody create their own unique product has to spin their own flair on it. So they create a different rule or a different thing or a different edge or a different something. But each one, you have to understand what, like, I guess the flair is. Right. So tired. Stable, sturdy as she goes. Let me double check EVXY while we're here. That, I was wondering what was causing limitations, volatility here. We need to get UVXY moving. So you're getting resistances on hedge pressure. UVXY is trying to break. Downside move, UVXY hedge pressure rate could be spontaneous volatility. But this continued decay is really good. So there's nothing in the way here. But this is just volatility. People are trying to sell at this open. Market's holding the fort. Stable, not scared at all. This is a winning trade today. It just hasn't happened yet. I'm totally okay. You can make Tradeovate show you the drawdown you have left on the accounts tab, like the drawdown. Oh, and you can set a drawdown target to display for yourself. That's pretty cool. Does IWM hedge break concern you? Yes. But at the end of the day, while that is a portion of what's going on, the S&P is the godfather of all of the family. So we need to make an IWM resilience. That's one of the things we need to look at. Is this a break? Not yet. It's not broken, even though it's flagged red. A break is one strike lower. So it's like almost broken. So if we go through and look at walls really quick. So while the flag comes on the other side of it, a break that would concern me would be at least one strike distance lower. So 173.5. Breaking through here means we're challenging 173 and lower. So we need to hit 173, which is the next strike and lower that I'm very certain that it's hedging at that area instead of just overshooting this area. So I am slightly eyeballing this. It's not concerning me just yet, but it does beg the question of should we make ourselves a Russell resilience? It would be Russell is more important than NASDAQ if one were to have a debate. So while it is breaking hedge, remember we are above triple B. So is this a break or is this just noise, an overshoot? So the way that the strike rule was created to deviate the difference between the two. So if hedge pressure is at 174, then I consider it broken when I've touched 173. Could be overshooting 174, but if you're challenging the next option has a delta 50, then of course you've clearly broken through some 174. Now when it's in the middle, 173 and a half, then breaking 173 is when I'm certain that it's breaking hedge pressure. So right about here I got a little concerned, and then now it's in the realm of it's just noise. So the answer is, are my eyeballs on it? Yeah. With resilience getting better, I'm not fearing this at all. It's probably noise that's going to hold. And it's also an illiquidity pocket. So if it does rally a little bit, you can get some push there, which is great. Good. I love that you guys brought that up. So Jason's giving you guys, or Joel's giving you guys some tips. To add the drawdown column in the accounts tab, if you guys are doing the funded accounts. I preferably don't want to change my layout, but this will give you that chance to push the button. I'll explore it later, and actually if I do like it, I'll put it on there just to see. Rest still looking pretty good. How can you be sure it won't fill the gap? If it fills the gap, I'm going really long on the gap fill, because rational markets, well, this is it right here. This is what I'm looking for. That is what we're seeing here. This is the scary part. So now it might fill the gap. Resilience is taking a second go. If it continues to fall lower lows, I'm probably going to close out. So there's some stock that's sitting right on the edge, it looks like. Let's go ahead and scan for it. Let's see what's the problem. Half cap breakdown. Let's see who it is. Because resilience is strong, half gap is support. You just have to watch. As it is, there's some stock that's right on the edge. You're gonna have to see what it is. Distance to half cap. Who is it? Microsoft. There it is. That's the answer. Microsoft today. That's enough to cause that sensitivity. So you can sort by it and it'll tell you distance to half gap, which is this column right here. And I'm searching by half gap breakdown. So the stocks that broke through half gap that cause that sensitivity, the moment it happens, Microsoft top of the list. Pretty cool, right? You're concerned with ones that are breaking through half gap, and probably Apple as well. So Apple didn't break through just yet. Breaking through would be that turbulence. So the answer was Microsoft. Pretty cool, right? So you actually search for the stocks that matter. So let's just keep an eyeball on Microsoft. Let's wait and see what it does. You guys liking this? Pretty cool. How are y'all liking the style of analysis, right? It seems I'm ahead of all the different things. Market quick dipped and I came, oh shoot, let's watch Microsoft. This right here is that right there. So we're gonna be very careful with Microsoft today. We should hurry up and go. I know, there's like, it just seems to be all the stocks are flat and we're watching these. Now again, even if Microsoft does shit the bed, we do have bull support a little lower, which does support the S&P and all others supporting inside of here as well. So even if I do get lower low and get squeezed out a little bit, there's still long ops off of hedge pressures on the dips. There comes a little drop. Let's take a look at this one. 915. Let's make sure that's not a, there's a quickie. You see that right here? Everyone's talking about a bear market today. Look at that. Resilience still nice and tidy. Nice and tidy. There's that half gap support. Everybody on this space today. Half gap 3.9. Here. Rez is still holding on. Man, that Microsoft, right? That little shakeout, I think, is a little shakeout for the fake out. Or fake out for the shakeout, whatever. looking solid today. But yeah, on that space, everybody's like, there's the SPY gonna fill its gap. I don't know, people walk into the stock market, as I'm noticing, already wanting something to happen because it's typically your confirmation bias. You're in a trade, you want it to happen. You see a little red candle, two people unmute their mics and we're like, there goes SPY going to fill its gap. And I'm like, ooh, should I add to my long here or not? Right? I don't come into the market wanting something to happen. I come in the market watching what is. Confirmation bias is the biggest problem out there. You're trying to fade this because of whatever reason. Anything that goes slightly in your favor strengthens the bias you already want to have. If you come in already wanting something to happen, you're gonna have hard convincing yourself not to see it that way. Right? So that's exactly what I heard on the space. There it goes. SPY is gonna fill its gap. It could. The evidence does not show SPY as a mechanic to fill its gap. Nice and stable. Very stable today. SPY gap fills. Gervais all the time. Wouldn't trust it. Yeah. So like I said, I just have enough that going to upper DD will finish this challenge. I'm not taking any additional risk on this account. Down to 40.10. Yeah, give or take. I don't think we'll get there. I lost everybody's. Can't hear any of the feeds anymore. On the space. Let me leave and come back. Oof. Okay. Man, I love my new chair. It feels nice. I got myself a new chair. I used to okay, so I had like a basic, well, a long time ago I had like a leather executive chair, like one of those ones you go to like Office Depot. I don't spend a lot of money on, I don't really like to blow money on stuff. So I bought like a $300 chair from like Office Depot, one of those leather ones a long time ago. And over time, I guess just the leather is just like a really thin, it's not really like sturdy, and it just kind of wears away. Your ass like wears a hole in it. It gets flaky, yeah. So then I said, you know, I'm tired of just buying these like chairs. So I bought like one of those really, really basic chairs. Like that was just like a chair you'd see in a conference room around a bunch of fold-out tables. It's like a $25 chair. But then I bought these really like nice memory foam cushions for the back for lumbar support and for the butt. So I turned it to a plush chair. Total cost, I think not like $25 for the chair, and I don't know, cushions are maybe $100 or so. And then I was like, I posted a picture of my setup. Everybody's like, oh, cool setup, but like, what's up with your chair? And I was like, no, I seen like a basic small chair, and I put these little cushions on it, and people are like, no. And then Tracer Matt sends me a text, and he's like, you ever heard of Herman Miller? And I was like, no, I haven't. And he goes, dude, you know, he's like, I watched your stream one time where you told everybody that the most important thing you should spend your money on is a bed, because you spend a third of your life in your bed. Like, never squander or like cut yourself short on betting. Like, literally, that's where you should be spending your money. That's an investment into you. And I was like, okay. So, you know, like I bought a really nice mattress, a Beauty Rest Black. That's what I got. So nice. Like, it was worth every penny. And Matt goes, well, it's the same thing. How long you spend in your office chair? I'm like, I don't know, 16 hours a day sometimes. So he's like, this is what you need to get. So Matt told me to buy a Herman Miller Aeron, and so I was like, all right, fine. I'm so frugal. I don't like to spend money unless it's like, well, actually, I'm lying. I spend money on computer stuff and tech stuff, and I don't like to spend money if I don't have to. I like to save money as much as I can. It's a lifestyle. To not waste money, to be a good risk decision maker. So anyways, I bought a Herman Miller Aeron. Dude, it is Amazing. Well, I got mine custom made with all the features I wanted. So I didn't go shop around on OfferUp or anything like that, but the Aeron, that's what I got, Andrew. Yep. Finally came in yesterday. And I'm like sitting here and I'm like, oh, this is super nice. Yeah. I didn't think about it that way. I was like, you know what? So, because Matt was like, I have one and this is the best thing I've ever bought with my money of all the things I own. And I was like, all right, you're pulling my arm here. So they assemble it for you too. I was like, you know, I'm used to the Office Max chairs where you get out your instructions and you build it yourself, the piece in the box. This thing came assembled. I just wheeled it into the office. Yeah, that's pretty nice. It's nice. It's like it's one of those ergonomic chairs. You don't sit on a cushion. You sit on like a springy piece of material. So it's actually kind of nice. It just feels sturdy and it feels like good support. They do have a gaming chair. I did see that. I'm not a big fan of gaming chairs though. I feel like it's too much. It makes it feel like you're in like a cockpit of a race car. I don't know. I just don't like the feeling of. I like the feeling of having lots of chair. I like to have my arms be able to sway because like I have to turn to the left to right on my screen. I have to turn to the right to adjust the microphone and play with the sound. I can't have like things restricting my movement. Their gaming chair is a scam. What's it like? Gaming chair is like a tall, like sturdy leather throne. I don't want like all this chair behind me. I want people to see. Like my whole thought was I don't want the chair to pop up on the screen when the green screen's active. Like I don't want to see a bunch of chair behind me. You made the mistake of buying a gaming chair. It's awful for your back. I never understood what made gaming chairs popular. Like it's a vanity piece for streamers. I get it. You got your logo sewed into the chair. I get it. But like I've sat on them before and they never felt like comfortable. I don't know. You can't play guitar because of the arms either. Yeah. Let's hang in there, baby. Let's hang in there. I like this. I like this. This is still okay. Sign up. Yeah, so that is Andrew says dream chair. I did maybe for gifts this year at Christmas time. Maybe in lieu of paying everybody bonuses, I'll just get everybody like a dope ass chair to sit on, and all the employees for your Christmas. Don't hold me to that, but we'll see. Maybe that'd be a great bonus, right? You guys have been working your ass off this year. Andrew. Let's see. That'd be great. I'm gonna tell you. We gotta share the wealth. But I do. Like I've been sitting here like I just got tired of I have like a very tight space I navigate in. Everything is like meticulously arranged. So I couldn't have a lot of chair. And Matt was like, no, it doesn't take a lot of space at all. It's actually really, really low footprint. And I was like, all right. Okay. Bank's still weak. Let's just quickly take a look at XLF. Yeah. Ugh. I mean, there we go. Lame. To Microsoft again. We're getting close to the moment we're gonna have to go to Zoom in a little bit. So everybody, we're probably gonna take like a 30-minute break and head over to Zoom. So those of you that haven't checked out hold on. Check out our extended trial. Come join us if you want to join the program. It's $35 a month, which is very inexpensive. Most inexpensive it's ever been. Just for 3 months, just to check it out and try it out. We're going to close the doors on that extended trial at some point soon. We just want to get a bunch of people to check it out and see how it goes. And then from there, it'll be a great offer for you guys to stay in the membership for a very discounted price. After that, resilience is negative. I don't like it. Been fighting all day. Let's see if we get to that hedge pressure. Should I take a dip when we get there? I think so. I do like it. The R&R is much better right there. Keep an eye out on Russell. It's still right on that edge. The second test of Russell. So I don't like the SPY resilience just went negative. I'm going to double check Microsoft really quick. Dropping below. Yep, that's it. Okay. Oh, yeah. Let's see what it does. Now, again, we'll have to see how this goes. See if it holds. This could be a permanent thing. And if that's a loss, it's a loss. No big. It happens. All the signs were good. So if the signs turn bad, then I take a little L. No big. No big. All right. Let's see here. SPY. Now with resilience negative, my formulation has changed to where half gap is resistance. We're going to tap hedge pressure. We're going to be very careful on a hedge break today. So if we drop below the close, then that's it. We're going to get squeezed. So we'll see. Yeah, this can get dirty. So if this does break through here and rest stays negative, then it's a break. And the break has the potential to fall 40, 50 points. So be very careful here. Okay. Yeah. Zoom sessions usually start about 11 o'clock, depending. So right about this time, give or take, is usually when I go back to the community. I usually have to follow up with the dev team. Hold on one second. He's talking about the classic. The graph, the right axis data only shows the right axis numbers. Don't like resilience right now. Axis numbers. Let's see what a good buffer on this is. We'll say a buffer of like 10 minutes. When is enough though? That's it. I'm contemplating getting out right here on a stop. That's it. Resilience. All resilience does is pivot from one side to the other. So resilience can potentially pivot here, crush hedge pressure, and go through here. It's still a bull long up. DD is still positive, which means that likely supporting here and likely touching the upper band before the lower. Hedge pressure break on irrational. Be very careful. UVXY hedge break as well. Market's just slowly deteriorating, building out. Nothing. In a rational market, I should probably be out of the position. So this is a pretty big hit. Just on the two. I was real positive on this one, but I'm going to hold right here and just close out right there if we hit it. So I'm sitting around the edge. The BLU has a pressure from here to there. That's it. With resilience negative, I don't like it. So I might decide to close, but this is right on the edge of where I'd like to play with the position. So this being negative, which means this is resistance to go down to here. My last thought on this is to, again, give it one more shot to rescue itself before I call it. So anything less than 0 is enough. This is resistance it can break. So this is a clue that I don't want to be in a possible 50-point upside down. Yeah. Shark Busy, how could you do that to us? Did my phone just die? Oh, no. Crap. Wait, hold on. So weird. We're talking about this right here. So right now I'm talking to the development team about this right here. I don't like this. I should probably start contemplating taking a little bit out. I'm going to give it like 2 or 3 more minutes to see if resilience gets back to 0 or touches 0. And if it does touch 0, I'm probably going to call it. With HP break, it's irrational. You can still have that rule with a grain of salt, right? Irrational market on hedge pressure break. Can't assume it'll touch the upper band before the lower. DD still breaks the tie on irrational. It's strong enough. Resilience not strong enough. Yeah, this was definitely a tricky day. Wasn't a big fan of this once this happened. So I don't know if I like it. Again, we still have an upward pressure from here to here, but resilience supersedes liquidity maps. So resilience says that is likely to happen before this. DD strong enough. Still 90% still pretty strong, but it means it might not touch the band today. It doesn't mean it has to. It means that it will likely not want to touch this one before that one. Fractional. And then sitting, yeah, but just this dive right here, you know, any green candle I get, I'm probably just going to close with what I get until that flips. Probably on a trade like this, back tests. You can always see that. My phone. I'm going to give it, because it was so positive for the longest time, I'm going to give it just a little bit more. I have a little bit of hope, but if I start losing hedge pressure down in here, I'll just cut and call it a day. So what we were talking about with my dev team is this right here. So whenever you have the chart, it's one of the things you guys put and drew for us to see. When you have the chart like this, anything that's off the side, this will reflect the last drawn point on the chart. It's just the way the charts work. So we're going to put some native buffer space between the last data point drawn and the axis, the right axis. And this is not the best setup. Hedge pressure breaks, a couple of these are a little alarming and concerning, so we have to keep an eye on this. This could be pretty nasty if we lose it. It's getting worse. I think I'm just going to call it. I know. I'm about ready to call it. If we break through hedge pressure. Again. This is hinting that it can break, so I don't like it. The market has some nerves. How dare this market turn like that? So I only got two. The idea was to finish this up from here to here. There's still some pretty good trade, I think. Volatility is there. Let's investigate UVXY really quick. You be careful on this. Illiquidity pocket. This can run really rapidly, so this can be a pretty quick dip dive today. So QQQ at hedge, SPY at hedge. Yeah, this is probably it. So bull long up typically has a pressure from here to there. With resilience being as strong as it was, it's very possible this does move to there, and I might get lucky. And if I do, I'll close everything out. So we will continue the stream today in our Zoom call. So I'm going to take about a 15-20 minute break. Everybody that just signed up, caught up, head over to the Discord really quick. You can follow the saga, the rest of the trade clearly. If we move up to there and this moves up to there, I'm willing to probably just close out with what I get right there and call it a day. If we don't get a nice strong resilience, then it's probably going to come lower before higher. So I might get squeezed out before it goes up. I don't like what I see. I'm going to have to figure out how I want to deal with this. I'm willing to trade inside of here. I'm going to stop down here. One strike below. Debating if I want to actually add to the position or not, but I don't think I want to. I think I'm just going to take an L right here. So it happens. But this is a quick shift. This was unusual, so I have faith. But I need this number to go above 0. It's been down here for about 15 minutes now. Don't like it. I'm looking for maybe a green candle just to get out on a pop. So I know the minute I close this out, it's going to pop. Okay, everyone head over to the Discord really quick. Click this. Check the extend trial, or go here. Check that out. Go there. We'll see you guys in about 40 minutes. 45 minutes. Nobody wants to buy today. I know. Let's see how the ETF saga goes. Let's go. Let's go. All right. We'll see you guys later. Head on over. Go to the Discord now. Everybody hit that like button on the way out. We love y'all to death. Do I turn this L into a W? Hadn't seen a losing day in a while on the stream. I don't know. Resilience just wouldn't turn against us. Market right on the edge. Microsoft, it's all your fault. Well, we'll see. We'll see how it goes, right? There's still that BLU potential right at hedge pressure, 396.5. So we can trade it right back up to the open price and see if that works today. If it doesn't, it doesn't. But as always, I'll show you my winner loss in a day transparency. P&L posted in Discord. Go to that link that I posted. Go check us out. We'd love for you guys to see what we all about here at Rocket Scooter. Future market analysis, we will teach you how to read the market, how to know we're in a losing trade like right now, how to know when to close, how to know to manage my risk and positions just to make sure I don't take too much risk and the potential to have a move go against me. So head on over to Discord. We love you guys. As always, we will see you in just a little bit, but the Zoom link will be posted. Let's all go to Zoom. If you want to continue the saga, you must go to Zoom. So we'll see you in just a little bit.